Hello guys, welcome to the channel. Today we're gonna check how actually the equilibrium zones are working. So don't waste our time, let's jump onto the chart. So guys, what is the equilibrium actually? Basically, you can see here, this is the gem box and the 15% level is the equilibrium zone. Below it, actually this is the discounted zone, and above it, about the 50% level, this is the premium zone. So what does it actually means? So if the price coming down from the premium zone to the discounted zone, that means you should buy because of the institutions and because of the momentum of it. And if the price coming from the discounted zone to the premium zone, actually this is the part where you should start thinking about selling. So basically this is the foundation of the equilibrium zone, but how to use it on live market conditions is a little bit different. You should find the high and the low as well. So when you see, I will use the path. So when you see the market, for example, is in an uptrend, that means it's going with higher highs and higher lows. So in this case, you just need to find the low and the high. For example, the previous low and the previous high. Here is our equilibrium zone. So we're gonna check. This is the low. This is the beginning of this move here, where you can see. So we're gonna pull the equilibrium zone from the bottom to the top, like this. And as you can see here, the price coming from the discounted zone to the premium and coming back to the discounted zone where the buyers take place and sending the price much higher and break the previous structure. And as you can see, here is the same from the bottom to the top. The price coming from the discounted zone up to the premium zone, where you should put your equilibrium, and the price again coming back to the discounted zone, and again from the discounted zone where the buyers take place, again break the structure to the upside. That means this is the bullish continuation of the trend. The bearish trend foundation is basically a high to the bottom. But as you can see, it's not going to be the higher, it's gonna be lower. So it's gonna be a lower high and a lower low again. A lower high and a lower low again. This is what we call bearish trend. With these market conditions, what you can find is basically pretty simple, like in a bullish trend. But the difference is we use our equilibrium zones to the opposite way. So here you can see we found the high and the low as well. Here in this part is our low. So the price right now in the premium zone and coming to the discounted zone when we're talking about in a bullish trend. But right now we are in a bearish trend, so the price is coming back into the discounted zone and breaking the structure to the downside. And again, as we see from the bottom to the top, or from the bottom to the high, or low to the high, the market is coming back to the premium zone, which is our discounted zone in the bearish trend, and breaking the structure to the downside. And this is how the bearish market continuation looks like. But let me show you this on the real charts. So we are on the charts right now, and for the equilibrium zone we need to find the high from the movement and the low of that movement. And our low is here, as you can see, and here is our high. So what happened basically is from our premium zone, the price coming down to our discounted zone, and it's going back into the premium zone, so where the sellers took place. And as you can see, from here the price went down, which means that would be a really good opportunity to sell. And now check another example. Maybe it's going to be much easier to applicate. This is the other example. We need to find a high again and a low. This is our low. So we pull our equilibrium zone from the high to the low. There it is. And as we can see, the price coming back to the premium zone, and from the premium zone actually there has been the distribution to the downside. That means this is again a good opportunity to sell, and actually I was selling here, so yes, that was a good opportunity to sell. And now I would like to show you the opposite, so how actually the price looks like in the equilibrium zone when the price is on a bullish trend. When a bullish trend is on, we need to find first the low. This is our low right now. And where is the top? This is the first movement top. That means we're gonna use our equilibrium like this. And we can see again that the price coming back to the discounted zone and went through the premium zone. So that means that would have been a very good opportunity to buy. This is the today's market. This is the equilibrium zone, and we need to find again where is the high and where is the low. So as we can see, we are on a bullish trend right now. So we need to find the low. Here is our low. All right, where is our high? Actually, this is right here. So we pull our equilibrium zone. As we can see, it went to the premium zone, then came back to the discounted zone where the liquidity and actually the buyers took place, and here you can see the price went up. So that means basically this is again a very good part to buy. So now guys, your first move should be go to your trading view and open any charts what you want. Then if it's an uptrend, find the lows and find the highs. If it's a downtrend, find the highs first and then find the lows. And you should keep practicing it for 1 or 2 weeks, and then you're going to be master of the equilibrium zone. And if you want to use this calibration what I use on the equilibrium zone, here is my specification for it. And one more important thing is that you should pick a pencil and a sheet of paper and write it down how many times does the price actually goes to your direction. Alright guys, so that was the equilibrium video. I hope you understand very well. If you don't, please leave a comment below. Tell me what should I emphasize more, and of course check the description below.